We talked about that in the last video. Some price changes and related conditions in the BTC market, and we'll continue that in this video. From the mechanism, the occurrence, and reason of the deep decline. The dominance of the hand of diamonds in the market is also discussed, including the impact of long-term holders, as well as the new changes in the market and competitive situation from a mechanical point of view. These deep declines occurred as new capital entered the BTC network. New inflows of capital were absorbed during the local uptrend. Peer pressure as investors redistribute their assets. This new capital is then lost in subsequent price adjustments. The depth of the retracement in the current uptrend is also similar to that of the 2015 to 2017 bull market. This again proves that the market is still relatively strong. This also indicates that although the local price peak of BTC has been refreshed again, but investors don't seem to be buying too many BTC assets at a higher price. The hand of diamonds dominates the market as prices rise under new peer pressure. The importance of seller pressure from long-term holders has also grown. Therefore, we can evaluate the long-term holder group. Unrealized profits are a measure of the reasons that motivate them to sell assets. The actual situation of the seller is evaluated by their realized profits. First, the MVRV ratio of long-term holders reflects a multiple of their average unrealized profits. Historically, the transitional phase between bear and bull markets has been for long-term holders. Trading profit is above 1.5, but below 3.5, and this phase can last for 1 to 2 years. If the market uptrend is sustained and eventually forms a new historical price peak in the process, long-held unrealized profits will expand. This will greatly increase their desire to sell, and eventually leads to a certain amount of seller pressure, which gradually depletes the demand that appears in the market. We will pass the 30-day net position change in supply from long-term holders to assess the payout rate of long-term holders. In March, BTC moved toward a new all-time peak. The market experienced its first major allocation of assets from long-term holders. In the past two bull markets, the net allocation rate for long-term holders reached 836,000 to 971,000 BTC month. Currently, net selling pressure from them peaked at 519,000 BTC month at the end of March. About 20% of that came from holders of grayscale ETFs. After this blurred state, the market ushered in a cooling-off period. The partial accumulation of assets has resulted in the total supply from long-term holders growing by approximately 12 or BTC per month. After the BTC price hit an all-time high of $73,000, as a large number of long-term holders began to reallocate their BTC assets, the pressure on the seller has decreased significantly. Subsequently, long-term holders began to reaccumulate BTC for the first time since December 2023. In addition, the market demand for spot BTC ETF has also picked up significantly. This has led to positive inflows in the market and reflects significant peer pressure. In addition, with the SEC approving the US as spot ETF, the playing field between BTC and ETH has become even. This allows digital assets to further deepen their presence throughout the traditional financial system. It is also an important step forward for the industry. The next video is even more exciting.